Good morning. For Traders Exclusive, this is George Kachuk with RCM Alt Advisors reporting to you from the CME Group trading floor in Chicago. Here we are the first week in April and the equity market rally continues. Naturally, we might see a little back and fill here. We've had some pretty good gains. Let's talk about what happened here. Last week, the market sort of got two blessings or two alibis to rally. Last week, early in the week, when Janet Yellen, federal chairman, spoke in front of the Economic Club in New York, basically she gave us dovish stance and the market took off and rallied on that. Then Friday, the market saw another rally when we got a really pretty robust jobs report at 215,000 new jobs. The market took that as a positive. Same with the ISM manufacturing number that came in greater than 50 again at 51, over 51, showing expansion. So the market had an excuse to rally. So the good news is that the market breadth continued to expand, and that's really positive. One of the bad things that we're talking about was that the biotechs and the healthcare sector was not participating in this rally. It's sort of a bad sign. However, that completely changed last week again when we saw the IBB, which is the biotech ETF, rallied 5% last week. So that's really a big move. It was led by some of the stocks that we talked about what we thought were undervalued, and they're doing quite well. Regeneron had a 9% move. Gilead started moving a few points. Celgene moved a few points. Amgen. So these are some of the biotech stocks you think one should be looking at. Similarly, we also saw the small cap stocks rally 3%. Now the Russell 2000 is still below its 200-day moving average, but that's okay. So it's got some work to do. However, you look at the S&P 600, which is another small cap index, that reclaimed its 200-day moving average. And the reason I'm talking about the biotechs, that's what pushed the NASDAQ above its 200-day line. So we need to just keep a few levels in mind here. So when we're looking at the NASDAQ, that 4860s should be an important support level. That's its 200-day line. We're slightly above that. Has a lot of resistance to the upside, right about 4980 to 5000. And on the downside, if it did break through 4860, as long as it stays above that 4800 to 4780 level, we still should be in a good uptrend. On the S&P, we should see it hold its 200-day line, which it's got a lot of room. It's the 200-day line's at about 2014. However, the S&P did enter sort of a heavy resistance zone right about 2050 to about 2132, 2134. A lot of trades went through there over the whole last year, so that's going to be a lot of heavy resistance. So right here, we might see the S&P start moving sideways. So now, since we're seeing this big bounce in biotech, we think these are some stocks you should look at. Namely, Gilead Sciences in the low 90s is very cheap at these prices. What basically happened, the whole biotech sector had pretty much like a dot-com kind of meltdown, and they pretty much just sold everything, whether the stocks were making money or not. There's a lot of biotech stocks, most of them do not make money. But again, these large cap stocks, especially a stock like Gilead, continues to make money. It's very cheap at these prices, no matter how you want to look at it. If you want to use a discounted cash flow model, if you want to look at PEs, the stock's very cheap at this levels, but it got hit with the sector. So we're looking for that stock to move. Now it has a lot of overhead resistance, but you could be nibbling on that anywhere in these low 90 figures and you'll probably be all right. But as always, consult your financial advisor if this trade is for you. Now other medical stocks also started moving. In fact, this morning we saw Edward Life Sciences rally about 16% on news about one of their heart valves. Similarly, we saw ISRG getting above 615. That was a stock that pretty much was stuck in a range for about 3 months between the 500 to 560, 580 level. And so we're seeing a lot of these stocks starting to move. This was a sort of ignored sector in this whole rally off the bottom, so we might think there's a lot of good values there. So as always, consult your financial advisor, see if this trade's for you. Let price and volume be your guide. This is George Kachuk with RCM Alt Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.